The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, noon till 1 p.m., 877-927-6648. Let's look at the Dow right now. It's up 25. The S&P's up 472 at 2656. The comp index is up 28 at 60. Oh boy, it's a little difficult to see right there. 68. And we've got the VIX down under 10 at 9.65. That's really interesting. The E-mini right here is up 5.25. In the daily chart, you can see there are two fighting patterns. I like to call them fighting patterns. One is the cup formation, trying to get back to the 2665.25 all-time high. The other is the arch formation that says, within the context of a smaller time frame, there could be a bit of a resistance going towards that level. And if there is a pullback at any point below the 26, it's at 26.56 right now. If there's a pullback at any point in the next 2 days below 26.42, that's going to suggest that there's a failure mode right now. The 120-minute chart, look at this. It's got a cup formation. All-time high is at 2663.25. Whoa, that can't be right. There's a difference there. 2665. Sorry, that's a 5 right there. I just said that, right. And you've made the cup formation, but you're starting to find resistance in this whole 2656 area. And what's really important is that you've got a cup. You had a left side, right side price time match. It tested it, went sideways, broke a little bit above it. Now I'm going to expand this so you can see something very interesting. See this green line here? Maybe I'll make it a little bit darker. Green line there. And that's not so good. I must make it a different color. I wonder what color. Just for now, I'm going to make it pink. And I'm going to make it pink, and I'm going to make it solid. I just want to show you something. And within this context, I'm also going to make it a little thicker. There. So that pink line shows that there is, based on this line right here, there's an up channel. And that up channel suggests that, yep, it popped up a little bit over that. But if the MACD, which is flattened out, starts to pull back, and that'll mean if there's about a 2 to 3 point pullback in the E-minis right now, it will go negative. The stochastic is strong at 85%. It'll probably have to need more. It'll need much more than that to go more negative underneath the 83%, 82%, and then to go under 80%, which is really the benchmark. That's your fulcrum line. Above 80%, I usually consider very positive. Under 80%, it says, oops, not so good. That doesn't mean to say the price can't go. It's just that the technical indicator is starting to weaken. And right now, what we're looking at, make this even bigger. Let's expand this. You see that this candle right here, unsure, this is the doji pattern, goes red, then it goes big green pattern, then it makes a slightly higher high and goes sideways. This is showing that there's still some internal strength, and that internal strength has 2663.50 to 2663 as key support. Above 2659, I think there's a good chance that it's going to try to worm its way all the way to the over the coming day or two towards the 2665 all-time high. Now let's get back to nitty-gritties here. You've got, let me do this, INDU. The Dow up 20, let me move this away. We don't need that anymore. The Dow is up 27. It is within the confines of this cup formation. It tested the 7-period moving average, but not the 9-period moving average. It's rallying some. This is where we start to see, is there going to be a right shoulder failure pattern right here? And if you're looking at the stochastic, this is only at 74%, and the MACD is good, but a little toppy. So this is going to be an interesting thing. I would have to say that 50 points up, very positive. 50 points down says, oops, sideways consolidation move. Nothing to see here. What's really interesting is the 24,327 level will make a peak D if it is not pierced this week. And we've got the Fed, we've got a lot of stuff going on. So I'm thinking rectangle sideways move more than the cup formation as being important. Monthly chart is still very positive. Let's quickly go to the S&P. We don't have to be quick. There's no rush right now. Let's go to the S&P. S&P has it popped out of the inside track repellent zone, came back under it, went back in it on Friday. Today it's back in it, and it's suggesting the MACD is still good. Stochastic's rallying, but it's still only at 72%, and the on-balance volume plummeted all the way down going into Friday's. No, that must have been 1, 2, 3. Yeah, that was about Wednesday's low, and then it's starting to move up. Now, what's really interesting is that this one held the 9-period moving average. Good support there. The weekly chart has a slightly better chart formation than the Dow in that it looks like it's going to 2657.19. I think it's going to test that all-time high. And no, that can't be right, surely. 2665.19. I didn't update. Oh, that's right. I was busy on Friday. We didn't update it. 65.19. Okay, good. Now what we're looking at is the monthly chart is still very positive. The weekly chart, as I say, slightly better technicals than the Dow. QQQ series. QQQ right now, 155.60, up quite nicely, up 90 cents. It has much more to go to get to that 156. Now, I believe that this is correct because I did it over the weekend. 56.69, 28th of November high. It's trying. The weekly chart has this kind of almost like a rectangle formation that says, yeah, it's not going to be it shouldn't be too hard to get there, but it's not having the support of the semiconductor index. And that's really interesting because the semis led the way up and down all year. Now they're starting to fail. So how the Qs are managed to move higher at this particular point is very important. It's only leg C in the monthly chart with the rest of December to go. Let's go to the IWM. There's a lot to do here. IWM kind of failing, just got stuck at that peak C, and it hasn't gone anywhere since. Leg B in the weekly chart. I think there's going to be a rotation that says IWM is in favor, then out of favor, then in favor, then out of favor. And that's kind of what we're looking at here. And all I can say is that 148 is extremely strong support. It's at 151.75, up 34 cents. And round about 153.70s is where, if it can get there, that'll be very good action, but it hasn't got there yet. Now let's go to gold. Gold is down a tad, 0.2 at 1248.2. Not great candles. The weekly chart has got almost like it's starting to set up like a 1-to-1 to the downside. I would say that gold has probably a little more to go before we can see some strength. The dollar, in the meantime, is holding quite well. It's making a peak beat today at 93.77, down just 13 cents. It's not great action, but the dollar is just holding up well. If you look at the USD JPY, which is the yen, the dollar-yen currency pair, this is in leg B. This is for me, a leading indicator that's suggesting that the dollar will follow and that the yen right now is leading to the upside and is trading at 113.38, down just a tad. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's up 34, S&P's up 5. Wait, we'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
This Dow's up 33, S&P's up 523. I think it's just a kind of little bit of a wait and see because the Fed's coming on in 2 days' time, Wednesday. Yeah, it's worth just having a look at this for a moment. Look. In the yields, you've got the 5-year, the cyan one, as I showed my subscribers over the weekend, a lot of charts went down. This 5-year T-note is FVX.X, cyan colored. It has made a peak C already, and it is working its way towards maybe even going to a D. The 10-year brown one, this is a TNX, is in an upper trading range. It is not quite as strong, but look at the distance. Look at the narrowing of these two. Look how wide the 30-year is. 30-year is still in the arch formation. Why? Because the TLT went to a peak D. That's what we always look for in the Chapman Wave methodology. Pulled back very sharply on Thursday. Friday was just a meandering bar. And now we're just above the 9-period moving average. And it's suggesting that yields are kind of stuck in a range right now, and that if there is a push into the 128.50s this week, the yields will come down very sharply. But the chances are that if there's a break under 126, you've got to be careful. That 30-year could start to rally. Those are the parameters I'm looking at. And if you're looking at crude oil was up earlier. Yep, it's up 65 cents at 58.01. I said that I think it's kind of stuck in a range right now. I see 55s is very, 56 to 55.50 is very strong support. If it takes out 55.50, that's not good. Then it's probably going to go to 54s. Meantime, I think it's just stuck in a range, 58.90s, maybe 59.30s, just stuck in a range that could change because the high that was made in the continuous contract at 59.05 back the week of the 24th of November. Look how you've held the 9-period moving average in the weekly charts, and the MACD is still good and the stochastic's still good. So it allows for a little bit more of a pop-up. Next thing I want to look at, EUR, USD. This is the euro dollar currency pair. My big thing here is that the weekly chart is the one that we're watching, and it has this H pattern. It's done it once. I think it's going to do it again. It's going to come back at 1.17. It's up just a fraction. I think it's going to come back and test the 1.164 200-period exponential moving average over the coming week or two. And if it does that, then I think gold and silver, let's see what silver's doing. I did gold. Silver is also trying to rally, but it's come off the top. And it's at 15.80, it's down just a fraction. And the other thing I wanted to look at was high-grade copper. High-grade copper, nice move up, 3.01. Yeah, that's important. So what's Valet doing? I was asked about Valet. Valet trading at 10.88, up 10 cents. It did make a peak C, and then it broke a little bit too deep for the cup formation. And now I have to look at this and say, Valet, that the weekly chart is struggling to get to a D at 11.73, 1 penny higher than that peak C that was made back in September, I believe. Yep, September the 8th. The 8th, right. That's when the dollar made it slow. Yeah, I just did more in a trading band right now. There's other things that are working much better. Okay, what have I missed? I know I missed something. Oh, I was asked about the XLF. XLF, it's down down 11 cents at 27.91. Made a peak D in the Chapman Wave, and that's it. And the MACD is still very strong. The stochastic strong at 84%. So this is a high-level consolidation. I'm a little surprised that it didn't go much higher. Asked about the SMHs. SMH has been very, very weak. Even Friday, early morning before the opening, it was running quite nicely with the QQQs, and then it just gave it all up. My expectation on Friday was that the SMHs would rally, try to go above the 99, about 0.05 level of the 9-period exponential moving average, close near that high, and then today would have a doji type candle with just a touch of the hundreds, 100.20 or something, and then tomorrow would start to pull back. And it didn't even have enough strength to do that. So that's really, for me, a tell, the SMHs, Semiconductor Index. KRE is the regional S&P bank ETF. It made a leg F/C in the, I'm going to call it a C for now, at least. In the monthly chart, it is at a peak, a leg C in the weekly chart. It'll be a peak C if there's no new high this week above last week's high, and the high of 61 point. So it's CC. Hey, CC. There you go, F/C. Look at that. This is KRE, Regional Spider S&P Regional Bank ETF. So C in the daily, C in the weekly, F/C in the monthly. Very interesting. I think it will be going higher. It's just digesting these gains. I'm going to put in a rectangle formation. For those who did my course on Friday, remember how we discussed it? So I'm going to grab the top of this high right here, and I'm going to grab the bottom down. Whoops, I didn't mean that. That was I wasn't concentrating. The bottom right here. So this is, I'll tell you exactly what it is if you're listening on the radio. This is the high, the low that was made on the 1st of December, that Friday, that crazy Friday. Sharp pullback, nice close, 57.28. Then the spike up on the Monday, last Monday, a week ago, at 61.26 on the 4th. I'm using those parameters, and I'm suggesting that within that, we're going to have a little bit of the big test will be, will it make a D? It should try to make the D, might be a little later. I'm thinking that there's another kind of an arch formation that's forming, allows for just a modest new high and then a pullback. We'll see. In the meantime, it's holding okay above the 9-period moving average. Talking about Mondays, so 3 Mondays ago, I did a webinar. For those people who did the webinar and were fortunate enough to get some of the picks that we had, some of them have had big, big gains. One in particular, a steel stock, has already moved about 17 or 18%. And then so today, and then last Monday, I'm trying to think what we were going to do about last Monday. Anyway, this coming Monday, a week from today, I'll be the guest speaker at the Boston Investors Group. I often speak there, and that'll be I guess that's the annual year-end celebration. I'm not sure if this is the final one. I think it is. So this will be on the 18th, a week from tonight, at MIT in Cambridge. It'll be the Boston Investors Group on the 3rd floor, and I'll give details. But I just wanted to mention because usually I kind of have it on my agenda and then just completely forget to actually talk about it. And I know there are quite a number of people, a lot of dinners that come, and a lot of TFNN listeners that come, and people who are interested, who are in the area. And it's always a lot of fun. I get asked questions that I have to deal with that I don't get asked other times, because these are quite a few people are fundamentalists. They understand the fundamentals of the stock market, and there are, of course, some technicians. But I like to get those questions on the fundamentals of the market, because then I have to think out of the box. So let's go to the. So that's KOE. I want to do that. Got the bell ringing here for this particular section to close. I just want you to look at. I've got a list of things I want to look at. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. So let's just look at, that's what I wanted to look at. It was the GBTC. It's just so interesting. Years ago, when I used to do some cartooning, I had a whole series of financial cartoon, well, stock market cartoons, really. One of the cartoons I remember drawing at the time and saying, man, this is just so funny how it works. I drew a cartoon where a guy goes, leaves the house and says, I wonder what's in store for the stock market today. And leaves, goes off to work, comes back and says, oh, Let me see how the market closed. Those are the days where you didn't have instant news. So let me see how the market closed. And it's, oh, unchanged, peaceful day. And then it shows you the chart of the intraday action. And the intraday had, at that time, a 150-point move, and the Dow was huge. So it was up, and then it was down, and all that. But it closed unchanged. And he said, oh, yeah, quiet day. And that's kind of like Bitcoin. So you've got GBT trading now at 1,791, up 141. But this has got nothing to do with what happens overnight. This thing trades as a ho-hum. I'm just here during the days, and I'll take a little coffee break now and again. Nothing to see here. But actually what happens is overnight is an incredible amount of action in the futures. And what we're looking at is that there's a pattern that I like to look at. And look, it shows you an oval pattern. This is more like a circle, but I'll draw it as an oval, like that, right? So at this particular point, this upper part of the oval formation, if I had to draw a midpoint right here, all right, here, look what it shows you. It shows you that almost all the action has been above the trend line that I drew, which is kind of a little, I'll make it actually more accurate right there. There, between that top and that middle, and that middle and that, it's about the same. So most of the action has been over the last 1, 2, 3, 4, 5, 6, 7, 8, 9. You can even call it 10 sessions. 10 sessions, no, the semicircle starts over there. 9 sessions. There have been 1, 2, 3, 4, 5, 6, 7, 8 closes above this trend line. That says that if there was a pullback to the 1500, under the 1500 level, you're probably going to go into the lower half of the semicircle and create an arch formation like a top. And this D will become a peak D of more serious consequences. Then you got something like close to a Roman candle here, and says if you start trading below 1500 for more than 2 hours, let's say, there's a good chance you're going to retest the bottom, and that bottom's at 1380, 1350, 1350. Okay. If in fact it goes sideways for about another day or two and doesn't take out the 9-period moving average more than intraday and then comes back again, if there is a spike higher, that's a very positive action. And that should help the stochastic improve. It's at 81%, good. But the MACD is making the second part of its M formation, and that would be very good. So GBTC is showing a weekly E/C, a monthly, I'm calling it F for now. I have no reason why not to call it an F, because it's gone straight up in one big move, and it looks like the MACD hasn't even had a moment to breathe. So this should be the continuation pattern. So we're watching it closely. A move above 1935 would be very positive and probably go a little higher. A move below, as I say, 1500, a close below 1500 suggests we're going to arch over and do a little consolidating with slightly lower highs and probably slightly lower lows. Okay, that's GBTC, trying to use some chart formation to help. Now, when I look at some of the aspects of the market, so the IBB, which has really been chopping around within a range, is up 79 cents at 106.86. In leg D, in the daily chart, but that was a really big pullback from the high of 106 that was 107 round number on the 4th of December. And within 3 days, it goes to 101.47. So that's a 5.5, almost 6-point decline. And now it's gone in one fell swoop from the low that was made on the 6th at 101.47. Green candle, gaps up, green candle. Today started off a little, sort of okay, and then came back down. Now it's holding very nicely. So this is what I've been talking about with subscribers. This is the rotational aspect that we're looking at. Can the semis, and in a little bit of a way the QQQCs, but mostly the semiconductor index, the SMHs, could they now have a rest as other areas start to increase in strength? So the IBB is holding very well. There's the conference going on. I think the conference has more to do with it than the fundamentals. There have been some fantastic reports. If you look at what's going on medically, I'm not talking about the costs. I'm not talking about hospitalization. I'm not talking about doctors. I'm not talking about anything else. I'm talking about the research that's gone on and the incredible progress that's been made in certain cancers. It is extraordinary in this day and age. We kind of ho-hum, take it for granted. The work that is going on is very, very impressive. And that's kind of what we're hearing about in some of the conferences coming out from a big conference going on right now. So IBB holding well. Now, the big thing is there going to be a rotational aspect where we've got the potential for a shoulder here, shoulder, not an S, but an H, shoulder, and maybe we should put a U in there, right? And a shoulder here, and the head is right here. Is this a potential head and shoulders? Someone made the remark, not dead, it's not a dead and shoulders, it's a head and shoulders. Someone made the remark that wherever you look, you're bound to find a head and shoulders pattern. And I actually agree with that. It's one of the chart formations that I like the absolute least, other than the cup and handle. Unless you personally handle it perfectly, it's generally, by the time you recognize it, by the time it actually works, you've lost the best opportunity of either being long or short. So I'm saying that there's an opportunity now for the IBB, while there's a consolidation going on in some sectors, to move up. And that says that the resistance now is trendline resistance in the daily, that we'll be at about 107.80. And the monthly chart says, no. You go all the way to the 110, 111 area to get the right size shoulder. And I'm just saying, you know what, either you're going to be long now and it's working out well, but you suddenly say, oh, head and shoulder works great, and then try to buy it at 111 where you haven't got too much on the upside. That's not going to work for me. And then we'll see if this becomes a shorting opportunity. But in the meantime, I don't think it's a short, or it could be more a long than a short. But in leg D, I personally have to wait to see a peak deep pull back, and then where does it hold support? If it holds support in the 105.30 to 104.90 area, and then shows some strength, that'll be a good thing. All right, so that's the IBB. I had a question about JP Morgan. JP Morgan coming up. JP Morgan once. Yep, peak D in the daily, a leg E in the weekly, and a leg C in the monthly. So JP Morgan looking out is still very strong. It's just doing some consolidating after a pretty good move to the upside, trading at 105.47 down 46 cents. Basil Chapman, Target Questions Hour. I'll get to some of the questions coming up right now. Yep, I'll get to those soon to be returned.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi everyone, we're back. I was asked about the OIH. That is the Van Eck Vectors Oil Services ETF. Monthly chart has made this very strong inverted V-shaped pattern right there to there and then there to there. And now it's trying to come off that successfully above the 20.46 low. It's at 25.13 right now. So on a monthly basis, let me show you the big picture. This is a chart that has really just gone sideways, and now it's starting to form. It's attempting to form a base in the 20 to 24-ish level, 25-ish level, from which to move higher. But it doesn't show any technical strength at this particular point, even though it's up 36 cents today at 25.13. However, the weekly chart has been holding the 9-period moving average even after red candles. Mostly it's trying to trade above it at 24.79. And now it's at 25.13, up 36 cents. Yeah, that's good. But one of the aspects I'm looking at is this kind of a soft W formation in the weekly. Just says, you know what, it's stuck. It is just stuck. Yeah, I could rally from 25.13 to 25.91, the 200-period moving average, or we could even try again for support in the 23.70s to 23.50s. But so far, I'm just saying it's stuck. And I would have a tough time going long right now, other than the rhythm. Even there, the rhythm is really shaky. It's very difficult to pick the rhythm. But there is a kind of a rhythm in this rather large second U-shaped formation. So it's got 2 U's next to one another, like a soft W. And yeah, it's moving towards the upside. And if it breaks under 24.60, it's probably going to go lower. But at this particular point, it's kind of good. And SLB was the question, really. SLB Schlumberger, which has got the same kind of pattern, except it's made a lower arch formation. It's not quite as strong technically, but it's easy enough to draw in trend lines. The trend line right now says from there to there. Let's go even lower down. No, right there. Perfect. That says there should be resistance based on the rhythm of this movement, and that should be in the 20. Did I say 20? I meant 60. 64.90s. In the 64.90, in the 65.80 to 66.30 area. That's good action. So yes, I do think it's good. Would I buy it? You know, I think it's worth to take a small position at 64.40 right now. If you don't mind having a slightly wider stop than usual, in this case, it'd be about a 2 point, make a stop 60. Oh, if it goes down to 62.40. So a 2 point stop, I think at 2.5%, 3% risk. Why? Because if it does really break out and it goes into the 66.50s, the candle that we're looking at here is the candle of the 10th of November, at 67.68. So daily, weekly, monthly. The weekly is definitely improving technically. So I would take a position. I'm not even sure I'd have a 2-point stop. I'd probably have a 1.35 stop. In fact, it should not pull back more than 40 cents or 50 cents before trying for the 65s. Yeah, so there are good question about what am I looking at? That's what I'm looking at. So the next question is Home Depot. What is it, a statement or a question? Home Depot. Yeah. Yeah, so Pete D, I actually think that Home Depot is about to stall. I think it's kind of done for now. It's had a spectacular time. Just gone, it went straight up in the last 5 weeks or so from the 160s to the 180s. I just think it's time for a bit of a rest. I don't think it's done, but I do think it's time for a rest. I'm basing that not just because it's winter time, but because this long-legged doji in the weekly in leg E, if I had to do this, what I normally do, which I was going through in my webinar on Friday, showing different techniques, I would put that little flag formation there. I'd make it even narrower, but I just want to show you the outline. And it says, yeah, a close above 186.31 would be very positive. If it's this week, it extends leg E. But if it struggles here and it produces this particular rectangle formation that has an inside arch that retests the low, then there's a good chance that Home Depot just needs a breather. It's been a spectacular stock. I wouldn't be, I don't know, shorting is something else. It depends on your time frame. But what I would say is I'd be looking at Home Depot as a potential buy if it can pull back 4 or 5 points over the next 3 to 4 weeks. But I need to see how it tests and the kind of pattern it makes based on the MACD and the stochastics. Stochastics way weaker. MACD is very good, but arching over. So I've got to watch this real closely. Home Depot down $1.40 at 182.01, being a spectacular stock. It should hold up pretty much into the year end because people that have gains don't really want to pick out the gains now when you've got the potential tax benefits next year. So we'll see what happens. So that was the question. Now, the RTH, I didn't look at that over the weekend. It's the one thing I just didn't have a chance to do. So that is a D, correct. This is an E, this is an F, and that's a G. I've found too many times that this becomes an instant restart, Chapman Wave instant restart. So I have absolutely no qualms about saying there's a great chance that this is now leg C that's unfolding. But to do that, I'm going to say this is E/A. Not A/E, E/A. And this is F/B, alternate count, nothing to do, still acting very well based on the MACD. And now a G/C, and we're going to be watching this real closely. This pattern says very often after an instant restart, that doesn't just go to a G/C, it goes to a D. The MACD says, but wait a minute, don't you say that this is exactly the kind of thing you look for to say that it's probably going to be a G? So I'm going to say, either way, I think we're getting a little toppy in the RTH, but we aren't there yet, not based on what I'm doing now. And weekly chart is only in E/B, and monthly chart is in leg D. So market vectors retail, RTH trading at 90.75, just down a penny, is acting extremely well. Getting close to some kind of a top, but not there yet. Next question I had was, when you compare this with the XRT, which was doing horribly until gapped up, XRT now is, look at that. What a big turnaround, because it really was lagging badly. It's only in C in the weekly. Wow, this says it can go all the way through December, making new high, making an all-time high potential. But this monthly chart says, a lot of work to be done. There's an inverted Roman candle upside down. It says at any point, if the XRT holds 46.67, it's at 44.80, down 14 cents. If it holds 46 points, let's go to 46.5. If it can hold that for more than a monthly chart, I would have to say more than three days. Yeah, 3 days. There's a pretty good chance that at some point it's going to try to get to the 48 high of December of 2016, 48.26. So let's just look at this here. We've got the daily chart. Give this a buy signal. Right there's up arrow. And we've got a break coming up. I'll take your questions. Any other questions? Otherwise, it's something I wanted to go through here it pertains to the New York Stock Exchange.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Everyone, Basil Chapman, last segment coming up here. Goldman Sachs. I think Goldman Sachs is going to try for the 254.90 high that was made on the 4th of December peak C. I think it's going to go just above that. And then we're going to see what the Fed does, what the implication is for the bank index. Higher rates should be a positive for the banks. And it's interesting what the banks are doing. They're trying every single thing. I think they have credit cards for whatever you want. I think I read that you want to transfer fees. You can transfer transfer from another account, a debt that something that you owe. You could just transfer free, basically for 12 months, 15 months, 0% interest, 0% transfer fees. You know, those transfer fees, I think, could be anywhere from 3% to more. So they're just doing everything. Not only that, the amount that they charge for all these little things that, an hour late on your payment, whatever it is, those things add up tremendously. So the banks is going to be very interesting how they respond. to Fed speak. If the Fed says raising rates quarter point, raising more. Hey, we've got a caller. Let's just go. Oh, Sophie in Tampa. Sophie, how are you? We got a moment. What would you like to look at?
I know, Basil. Real quick, could you just give me your opinion on Tesla, please? I'm in that at 312.32, and then also your opinion on Roku, please. And I'll hang up. I can hear you. Thank you.
I should be. Was it Hoku that you wanted?
Tesla first. If Roku.
Okay, Tesla looks fabulous. So Tesla's in leg D. It's got a fabulous move up 12 today. Congratulations. Good entry point. I would just say have a stop round about 316 to 314 if you want this as a more intermediate term long, because a Tesla it just defies everyone's ability to short it because it just holds and then it comes back strong. So it's in a leg D, but I do like the action. I like the technicals. So I would just say to you, you could have two positions, take off some if it breaks under 320, but keep the rest in Hoku. Let me just get there, Hoku, as we're going out. Is it Hoku? Oh, I missed that. Oh, no. Well, again, tomorrow we'll do the second one, but I like a very good trade on Tesla. Nice positioning. Basil Chapman, stay tuned for Steve Rhodes. I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.